All right, and we are live. Just making sure we're good to go here. Give people a couple minutes to join. All right. Someone put in the chat box, I sound all right. You can hear me okay? Good deal. Thank you, Scott. Someone just asked, are we recording this? So yes, this will be recorded. So if you guys, miss this, have a friend that misses it, feel free to share this afterwards. Happy to get this information out to as many people as we can. Cool. So we got people joining here. Just going to give them a couple more minutes to join, and we will get going on this. Before I get going here, anyone want to put in the chat box if you've already been funded, but with your PPP loan program? I know a lot of people have got approved of it, but a small percentage have actually been funded. So, hey, Randy, how are you? There we go. A couple people coming through. A couple people saying that they wish they got funded. Awesome. Yeah, I mean, before we kind of get into it, a lot of people have been kind of, complaining about the entire process. This entire process has been kind of a mess from the start in one aspect of the confusion and banks asking for different things. But, I think all things considered, we had people funded a week and a half after this was passed into law. So, it could have definitely been a lot worse. I mean, the magnitude and scale that they did here and how quick they were able to pull off most of this, I think is pretty impressive. Perfect. So I think we got most of the people on here, so we're going to kind of get into this. So similar to how we did the update before, you can put questions through here. It's going to be kind of hard for me to keep up with those. So ideally, I'm going to get through a couple different things here, and then I'm going to open this up at the end to answer as many questions as I can, kind of given the time allotted here. So let's get into it. Really, we're going to get into three things today. We're going to get into an update on the SBA disaster grant money. We're going to talk about the stimulus checks that started coming into people. And then what most people are here for is the PPP program, the forgiveness. How do we track it? What can we do to maximize it to make sure that we're not paying back that money or as small as possible? All right. So let's start off with the first thing here, the SBA disaster loan. So the SBA disaster loan and the associated $10,000 grant was one of the first things that was available to business owners. It was directly done through the SBA, and for many of you out there, you probably submitted anywhere from 1 to 4 different applications because they kept on changing that process. About a week and a half ago, they came out with what they called their final application, and I had a number of my shops submitting these applications. Now, the thing is that there was really no way to track this. And tons of shops were asking me, well, hey, how do I know that it's in there? How do I know that it's been approved? I got an email, but I can't check up on this. As of this, up until this week, we hadn't had a single person that heard anything back. And then this week, we actually did start getting people with money hitting their account. And so what they did is they changed that $10,000 maximum grant amount. And what they did is they actually lowered it down and said that businesses will get $1,000 per employee on payroll up to $10,000. And so I've had a couple of clients that have got the $1,000 for their LLC. If you have an LLC that owns the real estate that your shop is on, I've also had a number of clients that got anywhere from $3,000 to $10,000, depending on how many employees that they have. So if you have not got yours yet, I would keep an eye out on your bank account because people weren't even being notified of this. They were just seeing the money get deposited into their bank. One of the things to keep in mind about that is whatever you do receive on the disaster grant money will lower down the amount that the PPP loan is forgiven. Okay, so if you get a $100,000 PPP loan, only $90,000 of that will be forgiven if you got the $10,000 grant. Essentially what they're saying is they don't want you kind of double dipping on this, and so you kind of get one or the other. at the end of the day, we're still taking that money, because if you end up not using that $10,000 grant money that they give you and you do have to pay it back, then we'll leave that set aside and we'll pay it back. Now, if we have a better use that we could use that for, then maybe I'll throw that at some higher interest debt that I have on the books. Clean up some credit cards, clean up some loans, whatever it might be. Just like before, I think that there's some people saying, hey, we're close to being out of this. I want to be prepared. I want to do everything that I can, make sure that I have the cash on hand if I need it. If I don't end up needing it, then once the dust settles a little bit, we'll reassess and see where everything stands and see how best to use that money going forward. Now, as far as the SBA disaster grant money, there's actually two aspects of that disaster loan program. There's the grant money, which I was just talking about, and then there's also a loan program. And so some of my shops have also been contacted and said, hey, you qualify for the SBA disaster loan, a completely separate program from the PPP loan, but it's a 30-year loan at 3.75% interest. I had a shop in New Jersey email me yesterday and say they got approved for about $160,000 over 30 years at 3.75% interest. Personally, I don't even think that they probably really need the money to kind of get through this, but we're going to take that money anyways because it's cheap money. If I end up not needing it, fine, I'll pay it back. However, if I have other debt and other ways that I can spend that money, that's a pretty good interest rate, and I'm probably going to take a look into that. As far as we know right now for those disaster loans, there is no prepayment penalty, and there's also no payment for the first year. And so if you were to get the $160,000 like I was talking about, you could essentially sit on that for a year. At the end of the year, if you decide that you don't need it, pay it back, and we're no worse off than we were before. So something to take a look into. If you're a client of ours, obviously, if you have that decision, reach out to us. And we'll go through and see what your specific situation is. See if it makes sense for you to take this money. If you're not one of our clients, reach out to your accountant, lean on them. This is the time that you need to really be relying on the professionals that you work with. This stuff is ever changing. No two shops have the same situation. And so you really need to be talking with someone that is in depth, has an in-depth understanding of your business and your needs and what you have going on. All right. So that's really it on the SBA disaster loan side. I guess the update on that is keep your eye out. If you haven't heard anything, it's possible that you will hear this week. As of right now, I haven't heard anyone that's got officially denied. They just haven't gotten the money. So for those of you that have not got funded, we're not sure if you're not denied or you're still in the queue to get this money. As far as I know, there's no way to tell. So the next thing I'm going to get into is the stimulus checks. And so you've probably been hearing about it on the news. The stimulus checks from the Treasury Department have started to hit people's bank account. They started going out on Monday for those of you that have direct deposit set up. It seems to be that they are actually doing this in alphabetical order, because it seems to be that the clients that I've been hearing about that have gotten this are in the earlier part of the alphabet. I would imagine that most of the direct deposit is going to hit this week. Now, if you don't have direct deposit set up, they're going to be mailing out checks, and they've already came out and said that the checks could be delayed. There is a place on the IRS website to track the status of your stimulus check. However, I was trying to help a client track theirs down this morning, and she said that the website didn't even give her any information. So it's probably something they're still working on, but something to keep an eye out for if you want to try and check and see what's going on with the stimulus money. All right. So let's get into what we're really here about today, kind of the hard-hitting issues, the payroll protection program. So what I want to first get into is kind of an update on it, what I've been seeing around the country, what I've been seeing with other shops, what they've been going through, and then we'll get into how do we handle this money for those of you that have already been funded. So first off, we already have, I would say probably about 10 to 15% of our clients are fully funded. The remaining amount of our clients are kind of stuck in two buckets. We probably have another 30 to 40% of our clients that have been approved by the SBA and they have not been funded by their bank yet. The remaining 25 to 30% that we have right now, they're stuck in limbo. For the most part, that's going to be the bigger banks. I see some people on here that are already commenting that they're kind of in limbo with their banks. So, if you have one of the big ones, Wells Fargo, Chase, Bank of America, BB&T, all of these bigger banks are just moving at a much, much slower pace. They seem to be moving forward, but I haven't really heard that many getting approved through. It seems to be that the smaller banks are the ones that are quicker to act and quicker to fund. I had a couple clients last week. I had one client that actually applied in the morning and was funded by the afternoon. Again, smaller bank, and they're able to maneuver to get this stuff done quickly. At the end of the day, I think most of these banks, especially after they've been approved by the SBA, part of the reason that they're getting so gun shy on giving this money out is they want to make sure that they have everything in order. The last thing the banks want to do is, not get reimbursed by the SBA for missing a step. And so the tricky thing here is I've had a lot of clients ask, how hard should I be pushing this with my banker, right? At the end of the day, we still need to be on our banker side, or we want the banker side to be with us, but we still need to lean on them. Hey, I need to know what's going on. I need an update. I just give me some sort of estimate that I can work off of. Because even, as late as today, I still have clients saying, hey, I think I'm going to be funded on this. I just don't know when it's going to be. If it's going to be Friday, then I'm going to make one decision with my employees. If it's going to be next Friday, then maybe I need to start cutting hours or putting some people on temporary unemployment. It's just a really tricky thing. And I think that it's times like this, you realize how good of professionals you have to work with. You realize how good your banker is. You could think that you have a good bank, but we've been seeing a lot that there's been a lot of bankers that just have not stepped up. Have had confusion, have flat out lied to people, or just not been there when they needed help. On the flip side is I've had a number of clients that said, hey, you know what, my banker really came through, and they have a customer for life. Because you might not need your banker for most time of even, since you've been running your business, but it's times like this that a good relationship really pays off, and you can really see what the benefits of that are. So we talked about the big banks being delayed. One of the tricky things, that people are caught in right now is that if your bank is either moving too slowly or your bank is not processing these PPP loans, then you're stuck in limbo. Most banks out there right now are not taking any sort of new customers. They're only handling existing customers. However, more and more, I've been seeing more banks that are changing the stance on that, especially these ones that kind of have a good procedure down, and they are starting to take outside clients. So if you're really at a dead end, start reaching out to those, regional banks in your area and see what's going on. I would not recommend going to one of the larger national ones. As I've said before, they just don't seem to be moving that quickly. But I'd be calling around to see what my options are. For those of you that have multiple options out there on the table, I get this question a lot. Well, what should I do? Should I, pull back my application with one bank if I have it going through another one? If we haven't got to the point where they have everything that they need to submit to the SBA, then I wouldn't be worried about pulling back that application. However, as soon as you have one of your banks that is submitting that application to the SBA, I'd immediately cancel the other ones. The last thing that we want to do is submit multiple applications to the SBA and come up in a tricky situation where we're going to shoot ourselves in the foot. So, it's not a bad idea to have a couple of different irons in the fire to see whatever's going to pick up first. But once one of them bites and we start moving to that next step, I'd walk away from the other options that we have going on here. Someone on here said they have no banker to call, only a call center, and they have no information. Yeah, I mean, that's one of the tricky things here that I don't think anyone could have accounted for. These banks just are not prepared to handle the volume of loans that they're seeing right now. I was talking to a local banker and said, hey, what is the scale kind of compared to what you guys are used to doing? He said at any given point, they usually have around 30 applications in underwriting or, in the process of getting these loans done. As of last week, he had about 1,200. And to also, normal underwriting takes a couple weeks. They were trying to accelerate this into a couple days. So, I would give the banks a little bit of slack, but also on the same flip side, I want to make sure that I'm staying on them, making sure that I'm, getting service, making sure that I'm not getting skipped in line. At the end of the day, we need this money. We need it now so that we can move forward with our businesses. All right. Here's a good question here before we get to the next up. Hey, Bob. How do we know if they actually submitted to SBA? Good question. And so when they submit to SBA and the SBA approves it, you will actually get a confirmation number back. Once you get that confirmation number back, it's not a question of if you are going to get this money, it's a matter of when. What the SBA is doing when they get the approval back is they are assigning whatever amount of money you've been approved for to your EIN. It means that you're earmarked. You're not going to be in a situation where, we're going to run out of money. There's not going to be enough to go around. It's your money. The bank just has to figure out how to disperse it. But good question. Thank you, Bob. All right. So let's get into, what we do when we have the money, right? And so once we get this money, we know that we have 8 weeks to spend this money. And the clock starts ticking as soon as we get the money. Now, the big question has been, what goes into that, right? What can I use? What can I not use? Do I need to set up a separate bank account to track it? All of these questions that are kind of going around is just kind of similar to what we've been seeing with this whole process. We don't really get any really good authoritative guidance. We're going to get into some of the forgiveness stuff, but one of the caveats that I want to put up front is this is going on the guidance that we have right now on the forgiveness. They've given us a decent bit of guidance on how to fill out these applications and what the approval process looks like. As of right now, since we're so early in this forgiveness stage, they don't have a whole lot of information. And some of these things is going to be our best interpretation of this. I imagine that they're going to come out and, possibly give us some more direction on some of these more gray areas or specific situations. But as of right now, just like we've been doing, we're going to go with the best information that we have. So first off, let's talk about what we do when we get this money. The big question is, do we set up a separate bank account for this? I'm recommending all of my shops to set up a separate bank account for this money. All right. If you get $100,000 from your PPP loan, I'm going to ask my bank, hey, can I set up a separate checking account to track this? Whether it's a checking account, whether it's a savings account, it doesn't really matter. I want something that's little to zero fees, something that I can do transfers in and out of without getting charged fees. I just want a way to set that aside so that it's a little bit easier for me to track. Now, talk to your banker about this, because I've had some banks that have required you to set up a separate bank account. I've also had some banks that have reached out and said, hey, you're not even going to have access to your bank account. You're going to have to ask us to transfer money over, essentially like a monitored line of credit account. So before you do anything or don't do anything, I would double check with your bank to see if they have specific guidance on how they want this done. For those of you that haven't got any guidance, starting that separate bank account is a great idea. We're going to get into the forgiveness spreadsheet and see how we do that. But one of the things that I wanted to mention is I don't believe that we're going to have to pay this money directly out of that account. Most banks have said that you don't have to change where your direct deposit is coming out of. You don't have to change where your rent or your utilities payment is going out of. It just has to be tracked. Now, again, double check with your bank and ask them if they would like to get this money directly out of that account. If they actually want to see that payroll come directly out of that account, then obviously you're going to have to do some more work to change where your payroll is getting taken out of, change where your direct deposit is coming from. If we can get away with it, I'm going to leave it alone, and I'm going to leave the money in there and transfer it over as needed. All right, so let's get into the spreadsheet here. Let's see if you guys can see that. You guys should be able to see the spreadsheet on my screen. Can you guys see that? I'm going to make it bigger. All right. So this spreadsheet is available on our website. I'm going to put up our website here at the bottom. I'm going to take that off because then we're going to go on the spreadsheet here. Once I go through this spreadsheet, I'll give you guys a link, show you where to download this on our website. It's a free download. Anyone that you feel that can use it, whether you're a shop, you're not a shop, you're a client, not a client, happy to share this with anyone. This is just a tool that we have created for people to help not only track, but also forecast how much money they've already spent and how much money they need to spend. So let's get into this first section here on here. And so when we get onto this, you'll see at the bottom here, we have two tabs. We have a fillable version, which is where you can put all of your information in. It's completely clean. All of the formulas are in there. And then there's also this example tab. This example tab is going to show you how it should be filled out. Okay. So first things first, we need to figure out how much money we got. For this example, I'm going to use $100,000. And so when it says PPP loan amount, I'm going to put $100,000 on there. Now, since we know that this is an 8-week starting point, depending on whenever you're funded, We know that this is going to be a moving target for all different businesses out there. Some people are funded this week. Some people are going to be funded later this week. Some people are going to be funded next week. So the first thing that you need to do after you fill out your loan amount is you need to put in whatever date that you were funded. If right now on here we have this as 4/7 or 4/10 of 2020, if we change this and say, all right, we got funded as of today, I'm going to change that date. And you can see down below here, all of the dates of the ending weeks are going to be updated. So if you were to get funded today, the end of your first week would be 4/22, essentially a week from today. And then what we're going to do here is we're going to put in whatever cost we incurred for those weeks. Okay. And so the first thing that we are going to enter in here is gross wages and state unemployment, which goes into payroll costs. See, you say it's blurry here. Can anyone see if you can tell the spreadsheet if it's blurry for you too? It could be your internet connection as well, because it's looking okay on my screen. I'm gonna try to, looks good? Okay, cool. Thank you, Ozzy. All right, Patty, if you need help after this, if you can't read it for whatever reason, maybe watch the recording of it. It should clean up the stream a little bit, or be happy to walk through this with you. So as we know, what are authorized expenses to use for this? So we got a couple things on here. We got payroll cost, we got employer cost of health insurance premiums, we got employee cost of retirement plans. All three of those numbers, you should know how to calculate it, because that's what we use to calculate the PPP loan amount. Now, we use the payroll amount and the benefit amount to calculate the PPP loan amount, but we actually have a couple more expenses that are qualified expenses that we can use for the forgiveness. The first of those is going to be rent. If you rent to a landlord or you rent to yourself, you're going to be able to deduct the rent amount. Utilities, whatever utilities you pay out over the next 8 weeks are going to count for that. And then the last one is going to be interest on covered mortgages. We're going to get into all of those a little bit here. So the first one on here is going to be the payroll cost. And so you can see on there that for payroll costs, I have in parentheses gross wages plus state unemployment. Just like what we were talking about when we went through the PPP calculation, for our payroll costs, we're only interested in two things: gross wages. And when I say gross wages, that's before any pre-tax deductions. That's going to be including commissions. That's going to be including bonuses and all of that. And then state unemployment. Whatever you're paying for state unemployment is going to be included in those gross wages as well. So if you don't have anyone that makes more than $100,000 a year, then you're not going to have any adjustments for this box. However, if you do have someone that makes more than $100,000 a year, you're going to have to cap that payroll amount for that week. So if you factor in what $100,000 a year on salary looks like, that works out to be $1,923 a week. Now, one of the things that we're not sure yet is, let's say that you have someone that is on commission. If they're on commission, they might have a big check for the week, but they're still not going to make $100,000 for the year. It doesn't really seem fair to annualize that. As of right now, we do not believe that bonuses or commissions are going to be treated and annualized the same way that salary is. Meaning that I'm going to look back. If I have a commission-based technician that made $60,000 last year, and I know he's going to be similar to this year, doesn't matter what that weekly commission check is, I'm not going to cap that. However, if I have someone that makes $120,000 a year on salary, I will be capping that person. Same thing when I talk about bonuses. You know, if you get a bonus right now, it is not fair to annualize that bonus amount over the remaining weeks of the year, or annualize on a 52-week basis. Because that could be a bonus that you get once a quarter, once a month, or maybe even once a year. And so as of right now, we do not believe that bonuses or commissions are going to be annualized the same way that salary is. It's something to keep an eye out, and something that we're obviously going to be updating, but it's also going to be a planning opportunity, and we'll talk about that a little bit later. We got a good question on here. Hey, Jason, do owner's draws count as payroll cost? So the short answer is no. If you're an S corporation and you take owner's draw, that does not count as payroll cost. However, if you are a sole proprietor or a partnership, essentially the draws are going to be used as your payroll expense. The new guidance that they came out with for sole proprietors and partnerships is a little bit tricky, but essentially you're going to be able to use whatever you use for your payroll amount last year when you calculate the PPP. That's essentially going to be your weekly payroll amount for this year for the owners. The wages for your employees is going to be exactly the same, but yours is going to be based off whatever money you put in there for last year for the PPP calculation. All right. So the next thing is here is employer cost of health insurance. If you provide health insurance to your employees, whatever cost that you're paying associated with that is your cost. If you cover 100% of all health insurance costs, then obviously whatever you pay out for health insurance is going to go into that. Same thing with retirement accounts. If you have a retirement account, whatever the employer match portion is of that retirement account can be factored in there. I got some questions on here. Is this going to be on accrual basis or cash basis? Meaning, does it go off of when the expense actually happens or when you pay it out? To be safe, I would probably say when these expenses are paid out. I believe once we get to the end of the forgiveness period, these banks are going to start wanting to see backup. They're going to want to start seeing canceled checks to prove that you actually paid this amount. We'll kind of get into some of the planning opportunities we have there, especially for the retirement account once we get down to the bottom here. So next one on here is rent. And so rent is going to be a qualified expense. And so what they are saying is any rent that you pay that you've had in existence or a lease in existence before February 15th of 2020. Now, for those of you that rent from yourselves, most of you are probably looking or thinking to yourself, I've never drawn up a lease for myself. Right? I don't have one. I just pay myself the same amount of rent. I've just been doing it for years. Now might be a very good opportunity to dig that lease out of somewhere and sign it and make sure that you have it on hand. I'm not going to guarantee that all banks are going to look for it, but it's something that you should have. As far as rent payments, what if you missed a rent payment? You weren't able to pay yourself March and April's rent, and you're going to catch up in May. As far as we're concerned, there is no stipulations that you cannot reimburse yourself for back rent that you have missed. And so if you've been paying yourself $2,000 a month on rent, and come May when you have the PPP money, it's more than in your right to write $6,000 to yourself for rent as a catch-up. As of right now, that would all be considered a qualified expense for the forgiveness amount. A lot of people have asked, well, what happens if I want to change my rent up or down? I think that what they're going to do is they're going to go off of what your lease says. And so if your lease says that you have a rent payment of $5,000 a month and you pay yourself $5,000 a month and you've been doing that for the last, 18 months, and then all of a sudden you start paying yourself $10,000, you're going to have some explaining to do. Same thing with payroll. I don't think that the banks are going to be looking at this extremely hard. The amount of people that they're going to have to try and get approved for the forgiveness is massive, but it's one of these things where if you get too egregious on this, you could be put into a bad position there. Let's get into the utilities. So utilities is a bit of a tricky one because you don't have a specific guidance on what counts as utilities. I've had people call up and ask me, and we know the easy ones, right? Water, gas, electricity. We know that that's going to be a utility. What about cell phone? What about internet? What about your landline phone? What about your security system? What about waste removal? What about your TV utilities? There's a lot of different things. As far as I know, is if you can kind of consider that to be a legitimate utility expense, like all of those things I've mentioned before, I think that those are going to be acceptable and those are going to be qualified. There's a chance that they come out with an authoritative list and say what is it covered for a utility, but as of right now, they're leaving it kind of open to interpretation. I've seen some people kind of stretch some stuff into some gray area, and I'm fine. If we need that money, let's use it. Let's get it forgiven. But just keep in mind that I wouldn't, rely on some of these kind of gray area utilities to put me over the edge. I still want to make sure that all of this is forgiven without getting into too many gray areas. Let's get the easy ones first, the one that the bank is not going to give us a pushback on, and go with those. If we really can't spend all the money, then we'll start kind of getting into the gray areas, the interpretation and things like that. The last one on here that we have for qualified expenses is interest on covered mortgages. What I'm explaining that to be for most people is if your building is owned by your operating entity and you don't pay anyone rent, you don't pay yourself rent, whatever interest portion you're paying on that mortgage is going to be a qualified expense for it. Now, there's some information going back and forth. And again, I hate to keep on saying this, but I think that they're going to give me some more guidance on this, or everyone some more guidance on this, is there's some different viewpoints on what qualifies as, a covered interest payment. Some things that I'm saying is it's only on mortgages for real estate. Other things that I've been reading saying that it's going to be for all debt that's been incurred before February 15th of this year. As of right now, I'm leaning for my, recommending for my clients to only consider that for real estate interest. I would hate to, go through this whole process, think that we're going to have it forgiven, and then have them decide that they're not going to consider regular business debt as qualified interest and remove that, and then we have to pay that money back. So once we, go through all of these weekly costs for the week, we're going to come up with a total. This is the total where I'm going to transfer that money from my PPP loan account into my operating account. Ideally, each of these different categories, I'm making the transfer separately. So let's start with payroll. Whatever I pay for payroll for the week, if I use a payroll processing account, I'm transferring $9,750 from my PPP account into my payroll account. Okay. Like I said before, if your bank wants you to pay it directly out of your PPP account, then you need to do that. However, if you don't have to, I think transferring the money is much easier than changing around all your direct deposit information. Same goes with employee cost of health insurance, employee cost of retirement plans. Whatever account you're paying that out of, I'm going to transfer the money out of my PPP account. I'm going to transfer it into whatever account I'm using to pay those expenses. Rent is the same issue. Utilities is the same. Now, the only thing that's going to be a little bit different for utilities is some of you possibly are paying some of those utilities by credit card. If I'm paying those utilities by credit card, I'm probably going to write a check right out of my PPP account directly to my credit card. All these times when I'm making these adjustments and I'm making these transactions in QuickBooks, I'm putting in the memo exactly what I'm paying it for. That way, we're going to have a log from the bank account of every single expense that we're paying. We're also going to have the spreadsheet to kind of back up the numbers to see where we're trending. Okay. So once we have the first week in here, what we're going to do is we're going to go through each subsequent week and we're going to put our payroll costs in there. We're going to put our health insurance costs. We're going to put our retirement costs in there, and we're going to track it on a weekly basis. As you can see on the spreadsheet, this is going to track each of the 8 weeks of the forgiveness period. What I really see happening is for weeks 1 through 3, I think most shop owners that I talk to have said that they just want to really take a deep breath. All right, let me figure this out. Let me get some people back onto payroll. Let me get moving with my life, and then we'll kind of do some real forecasting. At the end of week 3, or even at the end of week 2, depending on what your payroll is, we should have a pretty good average of what we think that we're going to be paying for stuff. I'm using this slide or this spreadsheet as an example of if I had a shop and I knew how much my payroll cost was, I knew how much I paid for health insurance, I'm going down through and I'm putting in the actual week, and then I'm also forecasting this for the entire period. What this is going to do at the bottom is it's going to total up all of your loan forgiveness. And then it's going to tell you if you have any money left over, how much is going to be left over that you need to pay back. Okay. And so for this example here, we went through all of our total costs that we're going to spend over the 8-week period. And this is going to be fully forgiven. It's going to have $100,000, $101,000 of loan forgiveness. The loan was obviously for $100,000, so there's going to be no money that they have to pay back. One of the things on here that you can see that is taken into consideration on this forgiveness is that payroll costs have to make up 75% or above, around 75% or above of the forgiveness amount, which means that interest, utilities, and rent cannot make up more than 25% of the forgiveness amount. If that's going to be the case with you, this is the area where we could see your forgiveness amount being reduced. However, if your payroll is significant, I don't think that's going to come into play for most businesses. Let's use an example here of what happens if we're short, right? So let's say here that we're going to reduce this. I'm going to take out the employer cost of health insurance. And you can see down at the bottom here, right now, it's saying that they got $1,450 of a loan that's still out there. If you have any money left over, this is going to turn into a loan at 2 years at 1% interest. For this example, you would have a $61 payment for the next 2 years. You can see why banks do not want this stuff forgiven. Do you think a bank is going to want to have this loan on the books for 2 years at 1%? No, they're not making any money off of it. They also have a vested interest to get this forgiven for you as well. Now, let's kind of go into this and talk about, what we can do. Let's say that we do have a shortfall. Let's say that I went and I forecasted my numbers and I said, okay, if I keep on going the way that I've been going right now, I'm going to be $1,450 short. What can I do to maximize that? A couple of things I'm going to go in through is, all right, do I have all of the utilities that I possibly could included in this, right? Am I making sure that I'm paying myself back rent payments? Let's talk about the retirement plans. You can fund your match at any point throughout the year. During this 8-week period, it might be a very good time to fund your 401k or your simple IRA match. So we get that expense now. Now for payroll, payroll, we have a couple of different things that we can do there. Can you give increased wages to some of your team? Yeah, you can. As long as they're not making more than $100,000 a year, you're free to pay them more money. I've heard of a numbers of shops that have said, hey, you know what? I had to put some of my guys on unemployment, and so I'm going to use the 8-week period to kind of catch them up and make them whole. Just like you can increase your employees' pay, you can increase your own pay if you would like as well, as long as we're below that $100,000 cap. If you have a spouse that works for your business, you can go ahead and give them a raise. If you have kids on the books, you can go ahead and pay them during this period. This is one of those things where I've said before, pigs get fat, hogs get slaughtered. So if you were making $1,000, every 2 weeks before this, and then all of a sudden you're on payroll for $3,500 every 2 weeks, there could be a red flag drawn up here. But if you spread this over the course of 6, 7, 8 weeks, and you give an extra $50, extra $100 here, I don't think that that's going to raise any flags. And over the course of the 8 weeks, it's going to do exactly what we expect it to do. All right. So one of the things that is not factored in on this spreadsheet, and I see some people asking about this, is it does not factor in if you have a decrease in employees. And that's one of the questions that's been going out a lot. What happens if you have an employee that you had to let go? What do you do with them? And so once you get the PPP money, ideally you can bring them back. Reed's holding up some notes for me. I didn't even see what it was.
New tech signing bonus.
New tech signing bonus. So Reed's idea here was if you have a new technician starting, possibly you just hired one to bring them back, possibly a signing bonus. Really any sort of bonuses that you can go through that you can justify here are going to be a qualified expense. So back to like what I was saying here, if you have a person that's on unemployment, we are recommending that you bring them back onto your payroll. When you filled out that PPP application loan, do you remember that there was a spot on there where you had to put a number of employees? And so what the SBA and your bank is looking for is they're looking for you to maintain the same number of employees as before this as to during this repayment period. So if you had 8 employees before and you have 6 employees now, that's a 25% reduction in the amount of employees that you have on hand. And so what that would do is it would actually lower the amount that you get forgiven for the payroll by 25%. Obviously, anything that we can do to avoid that, we want to. The tricky thing here is I see a lot of people asking about this, or what are situations where you just don't want that employee back? Or, you might have been overstaffed before and you realize that you can't, maintain that amount of payroll. What happens if you physically have an employee that just can't show up to work? There's not a whole lot of guidance on if there's any sort of relief. As of right now, it's black and white. If you had 8 employees before, you need to have 8 employees when you're going back and you're paying this stuff. Now, they've been pretty clear on how we calculated the amount of employees before. It's on the application, right? Or I guess as clear as they can make it. It's on the application, so we know that number. What they haven't been clear about is how they're going to test the amount of employees that you have during a covered period. There's been some talks that it's going to be an average for the 8 weeks of how many people that you have on there. And there's been other talks that it's going to be a snapshot. They're going to pick a date and they're going to say, okay, as of June 15th, however many employees you have on the books as of that day is going to count towards your forgiveness amount. If you had 8 employees before and you have 8 employees on June 15th, it's 100% forgiven. It's 100% allowable expenses. Another thing that you can take into consider, or that needs to be taken into consideration here, is if you do get the PPP. If you do get the if you do get the EIDL grant money, the disaster loan grant money, that will again lower down the amount that you have forgiven. All banks are going to be tracking that a little bit separately, and so if you do have that situation, I'd reach out to your bank and ask them how they want you to handle that. Okay. So that is going to be really the major pieces on this. What I've been saying to people is, track this stuff, let's forecast it, let's see where we stand, and then let's see where we're going to be. There's some clients out there that say, hey, I either have more people than I did last year, so I'm going to be able to use this up easy, or I have it completely changed in the business. Every business is going to be a little bit different. I'm going to put the actual expenses in there. I'm going to be forecasting this as best as I can so that I have a good judge where I am. The last thing that I want to find out is that I come to week 8 and I'm going to be $10,000 short, because there's just going to be no way for me to get all of that made up in 1 week. We want to make sure that we're catching this early, that we're staying on top of it, and that we're forecasting this to make sure that we're making the adjustments as we go along. All right. So that is it for the forgiveness calculator. The next thing I want to do is show you guys where to download this forgiveness. So I put the website up here. This is our website here. So if you go to parmelis.com, over on the right-hand side here, you'll see this PPP loan forgiveness calculator tool. You click on that, it's going to go to a download screen, and you're going to be able to download this Excel file and save it onto your computer and go through it. If you have any questions about it, reach out to us. We'll help you as best we can. If you notice any issues in it, we kind of went down through and made sure that everything was working fine. But if you do see any issues, please let me know on that as well. And so that is really all I have for you guys right now. What I'm going to do is I'm going to leave this up on the screen for a little bit to get some different questions. And we're just going to start going down through them as many as we can here. I don't want to keep everyone on for too long, but we'll take the next 15 minutes or so to answer some questions. Helen, the application asked for the number of jobs, not FTEs. What if they were part-time and you increase hours for someone else? And so, Helen, I think that this is going to be a question that a lot of people struggle with, because when they put on there, they wrote jobs on the application, but then some of the guidance that they came out with later said, actually, we meant full-time equivalents. And so a number of my shops calculated it correctly, where it's saying, okay, full-time equivalents are the only one that counts. Someone that works 500 hours a year only really counts as a quarter of an employee. However, if you filled out the application wrong and you were including part-time, the first thing that I would be doing is talking to my bank and saying, hey, I have the same amount of full-time equivalents now as when I did before. It was just incorrect on my application. What can we do to change that? And I would try to change that as soon as I can. We want to make this as easy for the bank and as easy for the SBA. So if we can get ahead of this and say, hey, we need to fix this, we need to do this, what do we need to do? We just need to get ahead of it to make sure that we're doing everything that we can. But it's, if you increase the number of hours for someone, it's a possibility that you could have that full-time person or that part-time person turn into a full-time for the forgiveness period, depending on how many hours that you're getting them. All right, trying to go through here. Mitch, When do we start the 8 weeks? The 8 weeks starts ticking whenever you get the money funded into your account. So whenever that deposit hits in your bank account, that 8 weeks starts right then. Scott, is the forgiveness amount considered as taxable income and to be taxed? No, the forgiveness amount is not included in taxable income. It's 100% tax-free as of right now. Obviously, that could change, but as of right now, if you get $100,000 and it's all forgiven, it's going to have no taxable event for you. Mike, I was told not by my bank to not apply for EIDL and the PPP. I would try and get some more reasoning from your bank. There was a lot of information coming out there before to not do that. For the most part, we have, almost all of our shops have applied for both, and I don't really see any sort of issues with it. Ozzy, what date can we start the spreadsheet from? When do we get funded, or is there an arbitrary start date? So as of right now, there is no arbitrary start date. It's whenever that money hits your bank account, that's when the 8-week clock starts ticking. So whenever that money hits your bank account, that's the date that I'm putting it into the spreadsheet. Andy. So does the number of jobs on the application equal full-time equivalent employees on the date of application or full-time employees from 2019? That is a good question, and they don't give us a lot of guidance on it. What I've been telling my clients is whatever period you use to calculate the average payroll, at the end of that period, what did you have for full-time equivalents? So for some of you, you applied using your 2019 information. And so I would use the end of 2019 for the full-time equivalents. For those of you that went from April 1st to March 30th of this year, I'd probably use whatever I had on March 30th. It all depends on how you calculate it. And I'm not even sure the bank would even know the answer to that question. All right, let's go here. Eli, what about an end date? Do we have to spend it by a certain date? Yep, we got 8 weeks. And so let's say that we get it today. We have 8 weeks starting today to spend this money. When I say spend this money, obviously the money's not going to dry up at the end of the 8 weeks, but it's only going to be the 8 weeks that they're going to look at for forgiveness. So if you weren't able to spend all of it in the 8 weeks, then obviously whatever money you have left over is going to be turned into a loan. Pam, for LLC S corporations, is employer paid health insurance for the sole owner included in the health insurance calculation? And so if you have your S Corp owner's health insurance on your payroll, it's probably going to be already included in gross wages. So double check. If it's already included in gross wages, there's nothing that you need to do. However, if you don't have it on your W-2 and it's not included in gross wages, then yes, you're an employee of the business just like anyone else. So that would be a covered expense under this. Ozzy asks, what about owners who are W-2 employees in an S corporation? You are a W-2 employee just like any other employee, so you're going to be treated the same. Obviously, the same rules apply. Can't go over the $100,000 cap, but for all intents and purposes, you are going to be treated just like any other employee. Brian, I knew Brian was going to get creative on this one. Does fuel gas for vehicles count towards utilities? And so there was a kind of a line in there that said transportation utilities, and that was kind of the question that came up for a lot of people. As of right now, we don't have a good guidance on what counts or what doesn't count. So as of right now, if nothing changes, there's no way that a bank could come back and say, well, hey, fuel or gas does not count as utility, because there's nowhere there explicitly states what does and what does not count. What I would say about fuel and gas for utilities is I might try and include it in my forecast, but I wouldn't be depending on that expense to make or break my forgiveness, if that makes sense. Jim, are we automatically funded once we get approved by the SBA, or is there more of a process to get funded? Good question. And so the SBA approving you to be funded is letting the banks know that they're eligible to give you the money. All of this money is coming directly from your bank first, and then the SBA months down the road is going to be reimbursing your bank. theoretically, if the banks has their system in place, as soon as they get the approval from the SBA, they can give you your money. What we're seeing for some banks is they're still getting that process and procedures in place to get people funded. The good thing though is if you are approved by the SBA and you have the confirmation number with them, that means that you're guaranteed to get the money. If it does run out for whatever reason, which I don't think is a very good chance, you're still going to be earmarked for that money. Dirk, if there is a balance left at the end that turns into a loan, is that taxable income? That is not going to be taxable income. It's going to be a loan, just like anything else, but it will not be a taxable income. Patrick, you mentioned changes the relationship to owners taking wages as draws in a partnership. Does that apply to an LLP as well? And so no matter what kind of partnership you are, what they're going to be looking for is they're going to be looking for what income that you paid self-employment tax on. All partnerships are a little bit different, and partnerships can get very tricky. But essentially, whatever is shown on your K1 or the K1s of all the owners last year, there's going to be a line on there that shows how much self-employment or how much of that was subject to self-employment. Whatever that number is going to be treated as your wages for purposes of a partnership. Heather, our kids are on payroll for monthly. Should we switch them to weekly for right now? Now you're getting creative. I like this. Hey, if you're paying your kids, I have a lot of clients that pay their kids at the end of the year for whatever they did for advertising or office help. Do we maybe accelerate that to make sure that they're getting it over the period of 8 weeks? Yeah, not a bad idea at all. If you want to put them on payroll weekly, if you want to make sure that their 2 monthly payments fall in the 8-week period, whatever you want to do there, you got some flexibility. All right. Hey, Darren. I use a payroll service that combines health insurance, IRA, etc. Can I just use the total per employee, or is it necessary to break it out? I would talk to your bank and see what they want to see. I'm guessing, as far as tracking it on the spreadsheet, as long as I know how much of it is allowable costs, then I can track it all as a combined group on my spreadsheet. But obviously, when you go to substantiate this with your bank, they're probably going to want to see what makes up that total that you're using. Woody, what changes if the S Corp W-2 owner employee makes over the $100,000 mark? And so anyone, you're essentially just treated like any other employee. If you make over $100,000, you're going to be capped at the $100,000. Now, the $100,000 cap has nothing to do with benefits. It's just gross wages. If your gross wages or your salary for the year is $98,000, we can still add on retirement, profit sharing, and health insurance on top of that. Okay. Ron, and so I saw this question before. We are on a bi-monthly payroll. Should we prorate the payroll along with other eligible expenses to fit into the dates on the worksheet? And then will this money be taxable income on the state level? So the first question is, what is that you're on a bi-monthly payroll? That's kind of tricky because you could have one payroll that falls inside or outside of the 8-week period. Most of the stuff that I've been seeing from banks is going to be on a cash basis, meaning that whenever you pay this payroll out, it counts. So let's say that I was to get funded today. Whatever I pay for this Friday is going to count as an eligible expense. Even that means for most people, that was actually last week's earnings. And so depending on when it works out to you, that last payroll for the period, maybe we cut the pay period short and we make sure that that last payment falls under these dates. Or maybe we delay the beginning payment so that the first payment falls on the day that we're funding. There's definitely some wiggle room in there, but you're going to obviously want to get the okay of the employees. Sometimes employees get a little bit antsy once we start moving around those payroll dates, but we obviously have a little bit of wiggle room there for sure. Trying to keep up with all of these. Sorry, guys, if I missed it. Brian, Should we apply for the EIDL for our property holding company or rental car company? Yes. Takes about 10 minutes. Like I said, I've had one client that got approved for his rental property and his operating or his management company. I don't think it's a great chance, but hey, 10, 15 minutes while I eat my lunch, it couldn't hurt to do this. Hey, Kenneth, thanks for the question here. Could we pay rent forward? That's going to be a tricky one. It's for rent expense. I think that if you pay rent forward, there's a risk that they're going to kind of figure out what you're doing for rent there, and they're going to say this is not rent expense. This is prepaid rent. It's not going to be eligible. So I probably would not rely on that strategies. Lisa, great question. Are payroll withholding taxes allowed? They are not allowed as of right now. It's just going to be the same payroll calculations as we did on the PPP. Gross wages plus unemployment, state unemployment that you pay. Hey, Robert, thanks for asking this. This is a question that has come up a lot. What do you do if you lay off an employee and they choose to not come back to work because they're making more money on unemployment? This is one of the things that has been a severe issue and a severe concern for a lot of our employees, especially if you have someone that's not making that much money. If I make $800 working for Robert and I'm getting $1,100 to stay at home, what incentive do I have to go back to work? Well, the short answer on that is if you offer them their position back and they choose to not take that position, they're no longer unemployed. They're choosing not to work. Now, what is the enforcement on that? Will it ever get caught? Will they get kicked off of unemployment? I don't know the situation to that, but it is kind of a weird situation that we've had a number of shops kind of encounter already. Ideally, during this PPP forgiveness period, we want to be back to full employment so we can maximize that. If you have an employee that chooses to not come to work, then it might be something where I might be looking to make a switch. Every case is a little bit different. You got to use up to your discretion. If it's an employee that you want to keep long term, maybe work out something where it's saying, hey, I need you back. We can't be doing this. Obviously, if it's someone that you don't care for, someone that's been burned you before, you could obviously go ahead and let the state unemployment office know that this person's no longer unemployed. Really up to you. All right. So I'm going to do 2 more questions here to try and answer these, and then that's going to be it. If you guys have any other questions, please feel free to reach out. Be happy to help. Paul, I pay myself with a W-2 under 100,000, then distributions take me over the 100,000. Does not matter for you. It only goes off your W-2, your payroll amount. So if you make under 100,000, you're free to do whatever you want with the distribution money. It's going to have no effect on it. All right, let's get a good one here. Bob is going to finish us off here with a great question. I can already see his gears turning here. Can we hire more people to make up the difference? Yes. Right? We're going to need to, if someone needs to look at it, we're going to have to come up with a position title for them, and they're going to have to look and smell just like a regular full-time employee. So if you happen to get a new office manager that makes $25 an hour and works 40 hours a week, it just so happens that they have the same home address as you or possibly the same last name, that's just a weird coincidence. And I think that's 100% legitimate and 100% a allowable deduction. Now, obviously, we'll have to keep an eye out for guidance to see if they're going to close the loophole on that. But as of right now, that you're perfectly okay to do that. Perfect. So we got one more here. That's a good question I want to answer. If you have an employee that does not want to come back to work, is it okay to hire in their place? Yes, you can. So if you have an employee that doesn't come back to work, we live in America. There's no way to force them to come back to work. And so you really have no choice, Brandy, but to go and look for someone else. And I'm recommending most of my clients to do that are put in that situation. You might have given a person the leeway to allow them to collect unemployment. Now you're asking them to come back. If they choose to not come back, I think that speaks a lot about where their head is at right now. And it's probably somewhere where I'd be looking to get a new position to fill that role. There's no downside to hiring more than what's on the application. The stipulation is they want you to be at the same amount or increase. So obviously, if you're increasing, you're perfectly okay there. Awesome. Well, I thank you guys for so much for listening to me. I hope this was worthwhile for you. I hope that you guys are getting funded as soon as possible. Please go to our website, download the forgiveness calculator tool, share it with a friend if you think that this could help someone out. This is not just set up for a shop. This is set up for any small business. You have a friend that has a small business, help them out, send this over. We're all in this together, and I just want to make sure that we can get through this and get through this as safely as possible, and hopefully keep most of our sanity here. So thank you again for joining me. I really appreciate it, and you guys stay safe, and I'll talk to you soon.